So I'm going to share. All right, so I put this together this morning.
Okay.
Okay, so
Put that from the recording.
this is becoming a first-time home buyer and financial independence. Carry the process through. So, you bought your first house. Now what, right? So, what does it take to qualify to buy a house? So, what happens when people start making more money? I talk to trade schools all the time, whether they're HVAC technicians or they're cosmetology students, cosmetology schools, barber colleges. Um, you know, eh, just they're just getting started. They don't have any clue to what's going to happen in their life. Once they get that credential, once they get that license, their income goes up significantly. And if they're not used to dealing with it or not ready to deal with it, what do with their money? They blow their money. They have a they have a good time, right? They eat out all the time. They go partying. They buy a new car. They rent a bigger apartment. They tap out all the money that they're making. Okay, but then it comes time to buy a house, right? And they're like, what do you got to do, right? Well, this is the conforming loan limits change all the time. So in 2002, the conforming loan limit was $255,000. But in like August or September that year, it jumped up to $272,000 for a single family owner occupied. Yes.
Would you talk about what is a conforming loan? I don't think I've heard that term before.
Okay, so there's Fannie Mae is the secondary market for loans. When you hear them quote rates, they're quoting interest rates for mortgages. It's the conforming loan limit, which means it conforms to Fannie Mae guidelines. So what'll happen is if your loan meets the Fannie Mae guidelines, then after the bank funds that loan, Fannie Mae will buy that paper from them. They'll service the debt, and the bank will get their money back so they can lend again, so they can stay in business. That's basically how our lending uh, program works. Because if the banks they could have millions of dollars, and it wouldn't take very long for all that money to be lent out, and they wouldn't get their money back for 30 years, or until the owner of the property sells the property or refinances. Okay, so this keeps banks in business. So right now, as of 2023, the conforming loan limit is $726,200. Okay, the high balance, that's going to be Freddie Mac, which is another secondary market for the jumbo loans. Okay, so these are the conforming and the jumbo loan limits that says high balance. Okay, now you got to have more than. So how do they determine that you can afford to borrow that kind of money, right? Just because you want it doesn't mean that you're going to get it. Okay, so you have to have income, assets, credit, and employment. It's going to be you're going to have 2 years employment history and no gaps. You're going to have income documentation either from W-2s, or if you're self-employed, 1099. And you're probably going to have to show tax returns. Okay, if you're self-employed, you're going to have your net income or your qualified income. So what does that mean? After taxes. So if you got a good accountant, more they're cutting down all your income, so you're not having to pay taxes. That will work against you trying to buy a house or refinance. So you got to work it out with the accountant what they're showing so you can qualify. And you may have to pay taxes that year. You may get a tax bill, okay? And then, of course, rental income. If you own rental properties, or if you are buying a multi-unit, you're gonna live in one unit and you're gonna rent the other ones out, you gotta show your leases for that income, okay? And then credit, now here, this is showing 620 FICO score. The VA limit, that's for FHA. FHA says 580 FICO score, conventional loans, 620. VA is 660 FICO score, okay? Better your credit is, better the rates are. That's really not, I never saw that with a lender that, well, on second mortgages I did. The better the FICO score, the lower the rate, but not on first. I never saw that. It's pretty much going to be up to the broker on what the rate's going to be charged, what they lock them in at. Okay. The factors that weight your credit score, okay, your payment history, your outstanding credit balances, the credit history, your debt to credit ratio, type of credit, the number of inquiries. That's what they look at. Assets, this is all the same things they're looking at, where you can have assets that count. So you're looking at basically, they usually want to see 3 months PITI in reserve. Okay. And then here we are again, 2 years employment history, no gaps. Says here, education counts as history. How about that? If you went to college to be a teacher, then you got a job as a teacher, those years in college, I guess, help you qualify for the loan. And then self-employment history, you got to have 2 years in the same business. It may not be your business, maybe you were working for somebody, then you started your own business in the same field. That qualifies. Okay, so these are what it takes. All right, but who's going to help somebody get lined up to qualify? I was one of those people that did. I was a debt management consultant, and so I started off helping people get out of debt. As soon as they started as soon as I helped them get out of debt and get their credit score up, they start looking at buying a house. That's why I got my real estate license. That's why I started doing mortgages to begin with. Okay, but most of the time, loan officers don't waste their time trying to get people qualified, and real estate agents do not either. Okay, so if you either got it together or you don't. So who's going to help them? Well, what we help people do, it's just part of our platform, and this is right out of our book that we teach out of doing the financial literacy workshops. We show people how to make money, save money, grow money, protect their money. This is the platform. We give them proper protection, that we help them manage their debt, give them strategies to do that, help them establish an emergency fund. So our guidelines for emergency fund is 3 months income in reserve, gross income. Okay, 3 months, 3 to 6 months. Okay, so that's gonna for sure qualify them for a loan if the loan's asked for 3 months PITI. Okay, so we're helping them get there and some. And then, of course, their investments, which also help go toward the reserves for qualifying for a conforming loan. Okay, so I'm asking this question: would you want borrowers and home buyers that had their finances structured this way? Sure, they would. Okay, the financial literacy workshop. So how do we do this? See, buying a house, it's one of those things. It's that carrot that's dangled in front of the home buyer, the prospective home buyer, to actually do what they're supposed to do, right? To get their act together so they can buy a house. Okay, most people are going to have to do that. They're going to do it on their own. They're going to go back to the loan officer might tell them, these are what you need. This is the credit score you need to get to. They might give them a referral to somebody that actually, massages credit, and helps them, pay down their debts, right? They may do that. I'm not saying that they do. I know that quite a few people that are I actually have a relationship with a credit repair company that they created the dashboard. The guy that actually created the bureaus for the 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 scoring system for the credit bureaus started a consumer product where it's like they call it a dashboard. You can manage your own credit. Okay, so but that's about all they're going to do. So we have these workshops that we do. They do them. They do 66 workshops, building savings and wealth, increasing your cash flow and managing your debt, preparing with proper protection, your health and wealth, understanding asset accumulation strategies, and fulfilling long-term goals. So, here you go. You refer these workshops to these people that are trying to buy a house that maybe that didn't qualify. All right, they got me a message in here. Let's see. Oh, there's a 7th workshop. Thank you. That's for the RSSA, which is actually getting people to understand, what they're going to make in Social Security when they retire. The average Social Security check's about $1,200 a month. And then, so that's kind of like the baseline for your financial planning. And so the difference between what you're making now, what you'd make then is what we help you come up with and figure out how to get that income coming in. Thank you for that. All right. So they do these workshops every 5 days a week at 1 o'clock Central Time. And they do it 7 o'clock and 9 o'clock, Monday, Tuesday, Thursday, Friday. We do them at the office here, Wednesday at 6 o'clock and Saturday mornings at 10. All right, what's going on with here we go. So looking at your priorities. So what happens after you buy that house, right? This is something called the X curve, right? It's the law of decreasing responsibility and the law of increasing wealth. Okay, so these are when you have a job, you work for your money. What are you working for? These are always going to stay the same. It's going to be food, shelter, which is housing, a loan payment or rent, clothing, education, your health care and your debt. And then once you've paid off your debt and you've got your assets have grown, so you're living off your assets, your money's working for you, this LOI, right? Living on investments. That's what that is, right? But it's the same thing. It's your food, shelter, clothing, education, and your health and you're debt free by this time. Okay, so this is what we help people do. We help them put this together for themselves, so they can get to the right side of this X curve sooner. Okay, and we do that through these workshops. We have the financial education with our 30 by 30 financial literacy campaign. That's 30 million families educated by the year 2030. So just to put that in perspective, we're at 2.2 million right now. We've been doing this for 3 years. But when ChatGPT came out, I asked it, so what would we have to do? How much would people have to have in savings independent of the government to avert this coming financial crisis? Like right now, they just authorized in a funding to keep the government going for another 45 days. Because they've run out of money allocated for this year already. And what they did is they cut out funding for Ukraine. You're not hearing a lot of that on the news, right? But that's what they had to do. Okay, if we actually took out all the defense spending, all the funding for foreign aid and infrastructure, next year they would have to still increase the debt ceiling because of the entitlements, the Medicare, Medicaid, Social Security. They are just keep going. Okay, so when I asked this question to ChatGPT, it came up with 880,000 people, more than already have it together. 880,000 people have to have a sustainable income of $50,000 a year, independent of the government. That's what we help people do, right? If you had $1 million in your account, all right, and you took out 5% a year, that'd be $50,000 a year. Okay, so it's exciting when I can show somebody, somebody who's 32 years old, how they can get to $1 million before they turn 60. Right? That's exciting to do, right? And so then that's what we do. So it is possible. Okay. So this is what we do. We help people learn, how to increase their cash flow, how to pay off their debt sooner, modify their spending habits. That's another thing. Okay. That's what the magic is about the people that want to buy a house. They're so motivated by the house. They do whatever it takes to get it together to buy that house. Okay. But once they do that, they may as well just keep on rolling. Okay. Those same disciplines they need to get it together to buy a house, they should also start putting together for their financial goal toward retirement. Okay. And so it's a perfect segue to get the rest of their finances together. And that includes emergency fund, adjusting their spending habits, modifying bad spending habits, putting together an emergency fund, which is going to qualify them for their reserves to buy for a loan, get tax benefits, utilize their tax benefits, build a basic financial plan, learn about principal and choosing the right type of life insurance, get the knowledge on compound interest, get the tax law and receive tax benefits, learn to get it together for their children's financial education. Do you know that if you don't have your money in the right place, you got to spend your money before your child will get financial aid? But if you have your money in an insurance contract and annuity, it doesn't count against your child on the FAFSA form to qualify for financial aid. Then, of course, we also help people learn about annuities and 401ks and 403bs and IRAs and Roth IRAs and what the limits are and contributions and how they're taxed and what they can do for that. So, we help them build for retirement and get the long-term care expenses taken care of, estate planning, and how to earn extra income. And this is the workshops, 1 through 6. There's 7 now, the RRSP one. I haven't got the schedule for that unless I go there and schedule you. But there's the CR code that you can get on and schedule yourself for a workshop, or you can just give us a call and we'll schedule you. All right. And then you need to begin by a personal financial strategy. So we have this fillable PDF. What I'll do is I'll talk to somebody and either on Zoom or in person and get all this together. And it does all the math for you. It tells you, it totally adds it up, the debt and the income and what you owe on a mortgage, student loans. All right. And with and it gives you what your insurable need is. We show them, this is how this X curve works, and that these things going for them to manage their growth, have safety against the market volatility, the tax advantages, and proper protection. And then I give this to them. I send it to them in an email, and they can keep it updated. If they get more sophisticated, they start a business or whatever, they probably want to get QuickBooks. But this is the next best thing to QuickBooks, and we help them get started with this. So this is what we do that actually makes home buyers. We actually create buyers. So having these, but it takes them to the next step. That process of getting their act together to buy a house, they're already on the path to get it together for the rest of their financial picture and for retirement.
You were saying that a first home is kind of like the key when people start getting their finances together. And I thought of it's basically the carrot on the stick, right? It's
That's
what
exactly
moves
right.
them.
Yeah.
Yeah, it's what moves them forward. Yeah, go ahead.
It motivates them like nothing else will.
And I'm glad that you give this class to trade schools and stuff. I think that's excellent. High school is another one that I'm thinking of because they're mostly focused on college. But then, okay, what are you going to do after college? What if college doesn't pan out and you still want to buy a house?
I got to, I don't do this presentation specifically for trade schools. I do
No, I know.
what I just basically do is I go through the Saving Your Future book that
Mhm.
we teach out of, and I hit the highlights and I promote the workshops to them.
Okay.
Okay, because what's going to happen is they're going to be making more money they ever made before in their life, and
Mhm.
if there's nobody telling them how to manage their money,
How to, yep.
that what are they going to do? They're going to have a good time.
New
They're gonna
cars.
right.
And they're gonna look, their life is gonna look like a rap video.
Yeah. Well, what happens is like I kind of joke around like I saw this happen when I was in the SEAL teams because you think you're going when you're a Navy SEAL because you get the special pays, you get jump pay and die pay and hazardous duty pay, right? So you make
Yeah.
I made about $380 more a month as a Navy SEAL than I would have if I was not a Navy SEAL. Actually, as an E5 in the SEAL teams, I made equivalent pay as a chief in the regular Navy.
Wow.
Right. Okay.
Mhm.
And they had some guy come in and got everybody signed up for America's Funds mutual fund. I had a mutual fund for a long time, putting just $50 a month into it, but that thing grew. I wouldn't even pay attention to it. I forgot I even had it.
Yeah.
But my son had gone through a HVAC tech school. He's 32 years, just turned 32, and he's like making way more money. He used to be one of the highest tax bracket for Tesla in Fashion Valley, San Diego.
Wow.
And then a bunch of guys got laid off because of COVID. And he's like, Dad, I'm making way more money than I did with Tesla. I want to do one of those individual banking strategies.
Mhm.
And so what that was it was Index Universal Life. So I got him a $250,000 Index Universal Life. His target premium is $168.13 a month,
Mhm.
but he can max fund it to $1,066 a month, which is $12,750 a year, which is almost twice as much as a Roth IRA.
Mhm.
Tax the same, but he is not limited to if he takes money out of a Roth IRA for any reason before he's 62, then he's going to have to pay the taxes and a penalty, a 10% penalty.
Mhm.
Okay. Well, he'd already paid he'll pay taxes on the growth, and he'll pay a 10% penalty. Okay.
Yeah.
Where with the IUL, he can borrow up to 90% of that money in an awash loan, because that's how they get money tax free in retirement. So let's say you got $1 million in your policy, and you want $60,000 a year tax free income. So you
Mhm.
tell the insurance company, I want $5,000 a month. All right. So they'll borrow money. They'll take the money out of your policy as a loan, charging you 2.3% or crediting you 2.3%. They'll give you a credit for 2.3%. Then they put it in the general fund of the insurance company. And when they pay you, they pay you out as a loan, charging you 2.3%. So it's a wash. Now, he's real handy. He used to do home remodeling in San Diego before his mom moved into Pensacola, and then he did maritime construction there. Now he's doing HVAC and electrical. He's like, he knows what to do with the house. So if he finds a house in distress, they're in default, or they've got they're getting divorced or whatever, right? He can borrow from the policy to pay down payment and closing costs, fix up the house, flip it, and put the money back into his policy and go look for another one.
Nice.
And because he'd be basically becoming his own bank. That's what that strategy is all about.
Mhm.
So those are strategies that people can use. That's just one, right? That's just one of the strategies. If somebody's a real estate investor, right, and they're structured as a LLC or a C corp. Okay, so what's the max contribution for a Roth IRA? I'm sorry, for an individual retirement account. Either one is the same number. What is it?
$6,500 a year.
Good for you. Right. Okay. But is that going to be enough to actually make a difference in how much they're paying in taxes every year? If they're making any kind of money at all, it's probably not.
Yeah.
But they can have a 401k. The contribution limit is on a 401k?
Oh gosh, we went over there. Is it 20? It's either 12 or 22. I can't remember.
22,500
22,500. Okay.
a year, right? But on
Mhm.
top of that, they can do profit sharing. So if they're the owner, if they're the business owner, they make the decisions for the business. They can choose to offer profit sharing for themselves, which is going to be another, you know, it'd be up to $60,000 a year until they're uh, 50, and then it goes up to $75,000 a year combined, the 401k and the profit sharing. But on top of that, they can do a cash balance plan. Okay, so and if the older you get, the more you can put away. So I know at 50 years old, it's 160,000. All right, additional on top of the 66,000 or 75,000 with the 401k and the profit sharing. Okay, and so let's say you are a real estate investor and you are incorporated. These are additional ways for you to shelter your money from taxes besides doing a 1031 exchange.
Can you tell me again what the tax balance amount is for the 50-year-old?
It's 160,000 for 50.
160,000.
I'll send you the graph. I'll send you I'll send
Yes,
it to you.
please.
I got
By the way, I don't know if you know that you're still recording.
I do know that I'm still recording.
Okay, good. I just want to make sure.
Yeah, I do know. Right. So, you know, but basically these are things that nobody's teaching anybody.
Mhm.
Right. And I've talked to people that are financial professionals. I talked to a guy the other day who's fully duly licensed life and health, Series 663. And all he does and all he knows is variable annuities. He doesn't know about anything else. Right. That's all he's doing is variable annuities.
Oh man.
And he's all licensed up thinking I'm a professional.
Yeah. It's like you're
Right.
limiting yourself, dude.
Right. Exactly. So, all right. Well, I hope this benefited you. I'll go ahead and send you the recording.